Good afternoon, it's Christian Thwaites from Brian Janikowski, Thursday, May the 5th, Cinco de Mayo, so happy Cinco de Mayo celebrators out there. Not much to celebrate in the markets over the last couple of weeks. The S&P 500, sort of bellwether stock market here in the US, has pretty much been flat to down since mid-April. And that's primarily because we've seen a pretty lackluster earnings season with any companies that have missed their earnings get hit pretty hard down, and companies that beat are just sort of able to maintain their share price and their equilibrium. So there's really not much direction to the market. What we're seeing, in fact, is a little bit of a resurgence of the old risk-on, risk-off trade. Before I come to that, let me just show you what some of the inherent risks are in the market right now. Take a look at this chart, which is put together by Fitch, and you can see that it potentially is called a risk radar, and it looks at the favorable items in the market above the line, that is blank right now, and looks at the more unfavorable effects of the market below the line. The ones on the right are really low urgency, and we think that they're not very prevalent at the moment. However, the ones on the left are beginning to are still very much weighing in on the market with the Brexit, the fear that the UK might exit the EU next month, Eurozone deflation, and China hard landing still very much in the news and in vogue. So what that means is the risk-on, risk-off trade where safe assets like US Treasuries or the US dollar or the yen move together, and a risk-off trade and on a risk-on trade, things like equities and emerging markets, oil, or the Australian dollar move together. Those are really indications of a sideways market with not a lot of consensus on the outcomes. We're quite prepared to sort of sit this out while the market thinks about this. Right now we think we're pretty well positioned, but be prepared for some more sideways action with occasional volatility over the next few weeks.